The gold price in 2026 hitting $5,000 an ounce. It was not a mistake that it hit $4,000 an ounce before the end of 2025. Gold is $4,124 per ounce as I'm making this video right now today, and it's nowhere near ending. Guys, in this video, I'm gonna give you my gold price prediction. We're gonna bring on Andy Schectman, owner of Miles Franklin, in just a little bit here for you to learn his strategy on silver versus gold investing and why you might want to be invested in gold versus when is a good time to invest in silver. Now, it was completely intentional that gold hit $4,000 an ounce. So I'm going to be sharing today how the Pentagon is invested in gold and why they're invested in gold. I'm going to be sharing all of the historical moments where rate cuts caused gold to go up in value. I'm going to give you a lesson on economics so you can understand what makes gold move up so you can be there before it happens. And in this video, I'm going to show you how to turn gold and silver into cash flow, because I use gold and I use silver to turn into cash flow and assets that pay me every single month. Plus, by the end, I'm also going to give you my silver hack on how you can acquire silver for free. A couple ground rules here. I'm going to share a very interesting project of how the Pentagon is actually invested in gold and why. I'm also going to share with you that it's not speculation when a company like JP Morgan, BlackRock, or Bank of America come out and say, hey, we believe gold will hit 3,800 an ounce by the end of the year, 41.24 an ounce as I'm making this video, and we have all of Q4 ahead, okay? That is completely intentional. And so based on that, based on fact, based on historical moments, and based on screen shares I'm going to bring up, I'm gonna show you why I believe the gold price will hit $5,000 an ounce in 2026, and why I believe silver will follow as well. So let's go ahead and get straight into it. So first of all, let's bring up this interesting fact. There is a mine called the Stibnite Mine in Idaho. It's about 75 miles north of Boise, and it has been recognized to have the highest amount of gold deposits out of any mine in the lower 48 states. President Trump announced that this was one of 10 mining projects that he wanted to bring online so we could start extracting gold out of the ground. Now, when I started looking at this project, I realized that the Pentagon invested $65 million into this project. And I thought, why would the Pentagon want to own part of a gold mine? It was a $650 million capital raise, somewhere around there. And I started looking at the people, the companies that were invested in this gold mine. The Stibnite Mine predicts that they will be able to extract 450,000 ounces per year of gold out of the ground for the next 10 to 15 years. Now, when you're mining gold, there's something called the all-in sustainable cost, which basically means how much money does it cost to get an ounce of gold? This is a gold eagle right here. This is worth $4,124 as I'm holding it up here. This is a quarter ounce, right? This is worth just over $1,000 as I'm holding it up right now today. Why would the Pentagon want to be invested in this? So the ASIC cost of mining an ounce of gold on average is about $1,500. That's basically your profit margin. All costs to mine and get equipment in there and machine and mill and get out 1 ounce of gold on average costs $1,500. Well, that's quite a margin when gold is $4,000 an ounce, right? Now, there's this mineral at the Stibnite mine called antimony. What is antimony? It's needed in weapon making. It's needed in the making of firearms. Now, until a couple years ago, antimony was not thought to have existed in the entire United States. As a matter of fact, we get most of our antimony from Russia, Kazakhstan. They control 90% of distribution of antimony. Now, to give you a little bit of perspective, there's 130 million plus pounds of antimony located in the Stibnite mine. So when you are mining this gold, and a byproduct of mining the gold is a mineral that is needed in weapon making, no wonder the Pentagon invested $65 million in this project. And what does that do to the ASIC cost of mining it? It drastically lowers it. So the Stibnite mine is set to be one of the most profitable mines in the lower 48 states to mine gold. Now we're going to kind of transition thoughts. So I started looking at this project and I looked at who are the people, what are the companies that are invested in this project. Ever heard of a company called BlackRock? Well, BlackRock earlier this year had analysts saying, hey, we believe the price of gold will hit $4,000 an ounce before the end of 2025. So my question for you viewers is, if you were BlackRock and you make that statement, and then a few months later, you decide to own 20-30% of one of the most profitable mines in the United States, then you full circle have a lot to do with the price control of gold, do you not? So of course you would say we believe it's going to hit $4,000 an ounce when you intend to make sure that happens. And when you have hundreds of millions of dollars invested in a mining project to ensure it's going to happen. So that's fact one of why I believe the gold price will supersede $5,000 an ounce in 2026, because we're going to continue extracting it, because there's institutional demand for it. And this leads me to my second point. Nobody trusts us, okay? Since 1971, going away from the gold standard, we became the petrodollar. And you're going to hear a little bit more from Andy Schectman in a little bit here on this particular stance. And basically what ended up happening is the United States dollar was supposed to be the world reserve currency for purchasing energy. And we have inflated our dollar so much, printing more whenever we need it, causing hyperinflation that no country wants to use the US dollar anymore. That's why you've had the rise of the BRICS nations. So institutional money is hoarding it. We continue extracting it at record-breaking rates. And the big banks and the world reserve banks, the central banks, are hoarding gold like no other time in the past. Since 2022, the United States government, the Federal Reserve, the central banks have acquired more gold than any other time in history. As a matter of fact, the central banks in the United States own more gold than any other country combined. So why would you not do what the government is doing? Now, if the central banks are hoarding it, that gives it value in itself. Then there's something called the Bank of International Settlements. That's basically the boss to all the banks. And the Bank of International Settlements says that the only tier one asset outside the United States dollar is this. It's gold. But this leads me to my second point. Look at what happened with gold from September 17th of 2025 all the way to now. It's gone immensely up in value. Now, why would that be? Because when one asset crumbles, when another asset is not stable, when it's declining, that money doesn't disappear. It goes somewhere else. Now, you need to make sure that you're part of that money going somewhere else. If this asset, which is like 8, 9, 10 ounces of silver, is going down in value, okay? Let's just say that represents the stock market. That money just leaves the market. It doesn't disappear. It becomes something greater elsewhere. And that is what's happening with gold. So September 17th, rates drop 25 basis points. And gold goes from the bottom 3,000 range to $4,100 an ounce in just a few week period of time. In that instance alone, gold went up 25, 30% or more, okay? Now this leads me to my second point. Let's go into history and look at gold and silver. In 1792, we had the Monetary Coinage Act of 1792, which regulated the price of gold-silver ratio 15 to 1. Here's what that looks like so you can see this. The Monetary Coinage Act of 1792 regulated at a 15 to 1 ratio. This is 15 ounces of silver, 1 ounce of gold. Okay, it stayed like that all the way till 1834, when we then added 1 ounce to that. 16 ounces of silver, 1 ounce of gold. Now we stayed that way all the way up to the stock market crash of 1929. We were in that 16 to 1 ratio. It was regulated. But shortly after the stock market crashed in the Dust Bowl and that era where everybody lost their ass in the stock market, the government needed to do something, right? So they stepped in and said, hey, it's illegal for you to own gold. And in 1935, gold was worth $35 an ounce. But the government said, it's illegal for you to own gold. We have to buy it back from you or we'll put you in prison. So they ended up saying, hey, we got to confiscate this from you. We'll pay you 25 bucks for it. It was a form of tax. So the government confiscated thousands of ounces of gold across tons of Americans and said, hey, we've just created a $10 margin per ounce because it's worth 35. We bought it at 25. Then we enter World War II. World War II, I'm going to go fast through this section because I want to wrap into the point where we get Andy Schectman on. We talk about his philosophy, his strategy with gold and silver. I want to talk to you about my silver hack to acquiring all of that. Then I want to show you how to build cash flow with gold and silver. Then we'll get into more of why I believe the gold price is going to go up to $5,000 an ounce and continue going on. So World War II ends, our economy's booming, and all these countries get together. They said, hey, the US did pretty good in that. We need a world reserve currency. So this meeting is held in 1946 in New Hampshire called the Bretton Woods Agreement. And it is decided that the US dollar is going to be the world reserve currency. And it's going to continue to be backed by gold, right? Well, we do pretty well with that until 1971. In 1971, Richard Nixon says, hey, nope, screw all of that. We're going to go to the petrodollar. We're not backed by gold anymore. We're backed by the full faith and credit of the United States government, which isn't shit because we've just inflated money and printed it out whenever we needed it. And so we've arrived at a point today where countries are tired of what we're doing, right? We have so much debt and they don't trust our dollar. Here's a stat for you. 2015, if you had $100,000 of US dollar, it buys $73,000 today. If you had $100,000 of gold in 2015, it's worth $414,000 today. If you had $100,000 of silver, it is worth almost $400,000 $4,000 today, okay? The price of silver in 2015, $13.89. The price of gold in 2015, $1,062. The price of silver today, $52. The price of gold today, $4,124. Your dollar is going down in value, but the price of gold and the price of silver are continuing to go up. Now, before I get into my next point, I want to know from you guys, do you own silver? Do you own gold? What do you believe the price will be? And based on what? Let me know in the comments, and then we're going to get straight back into it here. And by the way, if you're new to my channel, make sure to subscribe. All I do is help you with wealth creation techniques. I take my gold, I take my silver, I invest in cash flowing assets. We help you guys get into assets that you can invest in passively. Oil, real estate, things where most people think you have to be accredited, but you don't. That is what my entire company is about. I run a company called the Capitalist Network. We are an end-to-end solution from mentoring you, giving you access to myself and my wealth building partners, my whole team of people that help everyday people just like you, whether you're very wealthy, just getting started out, you have a massive tax problem to solve, or you just want to start building cash flow. We help you leverage things like gold and silver, oil, real estate, tax, even dividend paying, cash value whole life policies, so you can literally build wealth on fast track. Not the slow way financial advisors do, not the way Wall Street wants you to do. We pay very little taxes, we make big gains, and we help everybody in the community to do that. If you want to learn more about that, there is a link in the description. You can check that out. So my next point here is I want you to understand why investing in gold is a great idea, why investing in silver is a great idea, and I want you to understand the relationship between interest rates and gold and silver, okay? I've got a list here, and I'm going to read off to you historical moments in time where interest rates dropped and gold went up. And we just saw that happen September 17th. We had a 25 basis point drop, and then gold went from 3,100 and some change, and it jumped $1,000. So let's look at this. We have October 29th of 2008. There was a 50-point drop in rates, and over 60 days, gold went up 15.91%. Then we had another rate cut, 25 points. December 16th of 2008, 60-day run, it went up 9.21%. We also had July 31st, 2019, plus 5.12%. We had March 3rd, 2020, plus 6.81% when there was a 50-point drop. Then we had a big one, 100 basis points, a full 1-point drop, 1% drop in rates. March 15th of 2020, gold went up 14.17% in the following 60 days. And then, of course, just recently, we had September 17th, going from $3,660 per ounce to $4,100 per ounce. Guys, that is almost a 20% increase in just what's a few short weeks. So I want to get on to my next point here, and I'm going to keep this video as short as possible. The gold-silver ratio is something very important to understand because it gives you hints on when it might be good to invest in gold, when it might be good to invest in silver. And in a second here, you're going to hear from Andy Schectman. If you don't know who Andy is, he's actually one of the partners inside TCN, but you're going to learn from him. We'll pull him in a second. So historically, we've seen that 16-to-1 or 15-to-1 ratio. And in the last 100 years or so, it's been 40, 50, 60-to-1, somewhere in there. And this signals when might be a good time to buy silver, when might be a good time to buy gold. Presently, with silver being $52 an ounce and gold being $4,100 an ounce, that gold-silver ratio is 80, maybe 90-to-1. When it starts getting closer to 60, that oftentimes can signify a really good time to stock up on silver, okay? But then what ends up happening is silver usually follows gold. So as gold continues going up, and you're sitting on a stockpile of silver, you've saved up on silver, you've watched that ratio balance out a little bit more and go from 80, 90, 100-to-1 like we've seen in the last 12 months or so, and it starts getting 80, 70, 60, it can signal a really good time to buy silver. And one of the things that I'll do, this strategy here, is when that ratio starts coming down like that and silver's on a run, a lot of times what I'll do is I'll sell off silver that I bought, maybe owned for $20 an ounce, and it's now 52, and I'll take that gain and I'll go switch it over to gold, right? And I'll play back and forth between those two assets. So now I want to bring on Andy for a second so you can understand why gold, why silver. This is about a 2-minute clip that I put together for you guys, so please listen and I'll meet you right back here.
If I had one choice, it's gold. Because the most sophisticated bank in the world, the central bank, the Bank of International Settlements, said gold is the only other tier 1 reserve asset next to US dollars. One choice, it's gold. Two choices, I buy silver right now at a price ratio of roughly 80-1. And when it gets to its historical average of roughly 40-1 price-wise of the last 100 years and 16-1 for 5,000 years, which was always its geological footprint, but now it's coming out of the ground at 7-1. It's an opportunity of a generation, and I mean that to my soul. I don't know if I've ever seen an asset that has greater demand with diminishing supply, expanding demand globally in three different forms: in monetary, in industrial, and in military. At the same time, it's disappearing in nature. At the same time, the majority of anything that's ever conducted electricity that we've used over the last 70 years is in landfills. So the little bit of silver that's been used in all of these products for all of these years ends up being thrown away. It doesn't pay to recycle a tiny little bit of silver out of an iPhone, but you add that times a million or millions, and all of that silver that's been used in industry for a better part of 8 decades is gone forever. So as we witness the depletion globally of silver to the point where the U.S. government's own branch of its Geological Survey Commission said that they believe that silver would be the first element struck from the periodic table of elements. It's an opportunity that you don't see very often. But in the end, when the ratio is correct, we switch back to gold, which the central banks are saying is the only other form of real money, tier 1 reserve asset in the world next to US dollars and treasuries, which has been that way for almost 75 years.
So you heard Andy say, if I had my choice, gold all day long. But here's the massive opportunity with silver. And some things that I'll add to elaborate with Andy is, only 27% of silver mined in the entire world comes from silver mine. We are in our 5th year of a supply deficit. So we have this huge demand for silver. As Andy said, it doesn't make sense to go into all these garbage dumps and waste places and recycle the silver. It's not worth that. The better thing is to continue extracting. But we're depleting all of the high-grade shallow deposits, which means we either need technology to outpace the demand we have to get it out of the ground, or what's ever left is left. And that's really the trend that we're heading towards here. So there is no reason. I had made a video a few months back about my silver price prediction. And I had said, hey, I think silver's gonna hit over $50 by the end of the year. We're here with 3 months runway, and it's already done that. So we're in a supply deficit. 73% of silver mined in the entire world comes as a byproduct of gold mining, copper, lithium, or zinc, okay? Because it's not profitable to continue mining silver out of a primary silver mine. So because of this, because of the supply deficit, because of the strain that solar panels, green energy, medical equipment, semiconductors, batteries, hybrid batteries, technology put on the demand for silver, electricity, right? Silver is going to continue being a overwhelming demand and a diminishing supply. Could be a great way and time to stock up on silver. Okay, so before I end this video, I promised I would give you 2 things. And I actually going to give you 3 things. I'm going to give you my silver hack for acquiring silver. I'm going to give you my line of credit strategy so that I can leverage gold and silver, because that is what I do. I use gold and silver as my bank, okay? And then I also have another giveaway for you guys. So let's talk about line of credit. I stock up silver and gold, and I keep it in a depository called Money Metals. And they're in Eagle, Idaho, very high income area. And they will issue you a line of credit that is interest only against your gold and silver. I took this out from my depository just to kind of give you guys a demonstration here. They'll give a line of credit 75% loan to value. So if I have $20,000 of silver or gold or both, they will issue me a line of credit for $15,000. Now here's the ugly. That line of credit is usually prime plus 2 points. So it's gonna be 9.5% interest, somewhere in there presently as I'm making this video. And that sounds like shit, right? And it is at face value. But here's the thing. The 30-year average of gold is 11.3%. Gold has literally done 20% in the last 6 weeks alone, okay? So if you have a line of credit against your gold or silver on a run as well, and let's just say, let's use round numbers. I have $100,000 of gold and silver. I have a $75,000 line of credit. Let's say my interest rate is 10%. So I'm gonna owe $7,500 in interest every single year. Okay, well, my silver and gold by that 30-year average are worth $110,000, $111,000 after a year. So I can literally sell $7,500 of that gain, acquire my interest for free, and I still have more silver and gold than I started with. And I use that line of credit and I invest into cash flowing assets like oil and real estate that keep me paying minimal to no taxes, spit out cash flow, and I repeat the process. More details on that, it's the link in the description called the Capitalist Network. You guys can check that out. Let's talk about how you can acquire silver for potentially free. You know those silver dollars or those 50-cent pieces we collected as little kids? Well, guess what? When you go to a Wells Fargo or a Bank of America, they oftentimes have these just sitting in their drawers. And so you can go in and you can buy a roll of 20 50-cent pieces, for example. These are silver eagles, but for example, let's just say I have 20 50-cent pieces here. All right. Now, some of these 50-cent pieces are newer. So they've got this knurling on the edge, like you can see, right in here. They've got this knurling, right? And a lot of that has a copper color because it's infused with copper. Now, if you see ones that have knurling, but they're completely silver like this on the edge, they're completely silver because they're made of silver. A portion of that 50-cent piece is made of silver. So what you can do is you can buy a roll of 50-cent pieces. There's going to be 20 in a roll. You'll pay $10 for them. Take apart that roll and just stack them sideways like that. And you're going to see this one's copper, these three are copper. Oh, but these are silver. Each one of these is about $15 of silver content in them. So you could go spend $20. And even if you only end up with one or two, you literally have already made money. You could go to a depository or an exchange and they're going to buy this silver. They're going to value it, this 50-cent piece, not at what it says, right? Because a silver eagle says it's $1, right? But this is $52, $53. They're going to value it based off of its silver content value, okay? Hope you guys have enjoyed this video so far. If you're subscribed, make sure to tap that notification icon so you always stay updated on the videos that I'm dropping. If you haven't subscribed yet, make sure to subscribe and smash that like button. And I also want to invite you to a free webinar that I'm hosting, which is all about how to multiply your net worth. I'm multiplying my net worth 2 to 3x every 4 to 6 years, okay? I pay very little taxes. I leverage gold, I leverage silver, I leverage real estate, I leverage oil deals, and I'm teaching all of this on a live webinar. The link is in the description. Appreciate you guys. Let me know any questions you have. I reply to my comments, and I'll see you in the next video.